Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar continues to hold to its bullish stance since establishing a short-term base seen minor at 78.90. The currency has remained relatively positive since the recent release of the more positive RBA monetary policy meeting minutes for June. Since breaking above the 79 handle, it is noticed that the pair is struggling a little with momentum as it slowly looks towards this resistance now at 79.95 to 80.20. It is viewed towards there, should expect supply or sellers to lean against this level on the first round of tests. Now today we have the unemployment change, which is forecasted at 14,000.4. If the market comes out on that number or around 15,000, then it may generate a price for the Australian dollar to rally onto the fresh highs around 2017 of 80 cents. Although it should be noted that if it does come out, the RBA will be pressured to lift official cash rates off the record lows, which is around 1.5%. However, the RBA did signal that the neutral nominal cash rate, should I say, would need to rise to around 3.5% to keep its inflation in check and growth at reasonable levels. So we do need to keep a very close watch on today's unemployment change and see what the number is actually revealed. With the US dollar remain weak and towards its 11-month low around 94.27, we now have tonight the ECB rate decision. It is viewed that the bank will remain unchanged to its stance. However, the press release will be looking very close to what Mario Draghi has to say after his surprised market conference that he gave 2 weeks ago, that the change of the QE did trigger a rally in the euro, as you can see back here. The resistance still remaining capped at 115.80 with the uptrend at 113.65.70. If we do see a weaker US dollar, then we will be looking towards these highs around 116, which was seen 3 attempts over the last 2.5 years and did fail and didn't remain up there more than a week. So I do expect to see fresh selling to come in if we go above 115.80, but at the moment it still seems quite comfortable in containing any rally at this stage. Well, dollar yen remains weak and still is some concern that the support of 111.10 will be challenged in the next 24 hours. In light of the minor support coming in at 55, we could see pressure towards this region. Now a break under 111.10 sees little support until 109.30.50, so do keep a note on that level of 111.10. Resistance on the top side now seen at 112.55. Well, the pound didn't make much movement should I say overnight, and as you can see still seems to respect the recent upside after spiking of a 131.25 level. Now looks towards the support coming in around 130.05 to 129.50 and reassess from there. Any advances should find a cap around 130.90 to 131.35. The outlook for gold still is bullish, however still going to tackle this level of 12.45 to get any indication that the next target comes in towards 52 to 59. With the dip still played as an intraday buy, I expect to see support coming in now at 36 and firmer from 32. To wrap up with oil, the market still looks like it's attempting to restore its bullish bias. However, that being said, the market still has to take on this level of 47.65 to get to the next target of 48.60. If we see a rejection from there, then this would turn the focus back towards the downside of 46.40, and a break from there would reveal the next target of $44 a barrel. Technically, the market still looks like it's getting a little bit tied up here, so we could see a rejection very, very soon. So that wraps up my daily video. Thank you very much for joining me today.